Ever wondered what's the difference between a credit card, a charge card, and a debit card? Well, you're not alone. This is a common query, especially for those dipping their toes into the vast ocean of personal finance. After all, these plastic cards may look similar, but they operate on entirely different principles and can have unique impacts on your financial health. Over the next few minutes, we'll dive into the basics of each of these card types, exploring their pros and cons, and how you can use them effectively. We'll strip away the financial jargon, breaking it down into simple, digestible information. From the immediate payment demands of debit cards, to the flexible payment options of credit cards, and the full monthly payment of charge cards, we'll cover it all. By the end of this video, you'll have a better understanding of these financial tools and how to use them to your advantage. Let's kick things off with debit cards, a common, yet often misunderstood financial tool. Now, what exactly is a debit card? Simply put, a debit card is a payment card that lets you make transactions directly from your bank account. Imagine walking into a store, picking up a few items, and instead of handing over a wad of cash, you just swipe or insert your card into a machine. Voila! The money is instantly deducted from your account. But how does this magic happen? Well, every time you use a debit card, the merchant's bank communicates with your bank to check if there are sufficient funds in your account. If there are, the transaction goes through, and the amount is deducted from your account. If not, the transaction is declined. No overdraft fees, no interest charges, because you're not borrowing money, you're spending your own. Now let's look at some of the benefits of using a debit card. First and foremost, it helps you keep your spending in check. Since you're spending money directly from your account, you can only spend what you have. This can be a great tool for budgeting and preventing overspending. Debit cards also offer convenience. No need to carry around cash or checks, your card is all you need. Plus, you can withdraw cash at ATMs, make online purchases, and even set up automatic payments for recurring bills. But, as with anything, there are downsides. If your card is lost or stolen, someone could potentially drain your bank account. And while many banks offer fraud protection, it can take time to get your money back. Also, unlike credit cards, debit cards don't help you build credit history. So, in essence, a debit card is like digital cash. Spend only what you have in your bank account. It's a tool of convenience and control, but one that requires careful handling. Keep it safe, keep track of your spending, and it can be a great asset in managing your finances. Now, let's delve into the world of credit cards. A powerful, yet potentially dangerous financial tool if not used responsibly. A credit card is essentially a plastic or metal ticket to a short-term loan. When you make a purchase with a credit card, you're borrowing money from the card issuer, typically a bank. This borrowed money isn't free though. You'll need to repay it, and if you don't do so in full by the due date, you'll get hit with interest charges. One of the great things about credit cards is that they allow you to make purchases even when you don't have the cash on hand. They offer you the flexibility to pay over time. You can spend up to your credit limit, which is predetermined by your card issuer based on factors like your income and credit history. Credit cards can also offer rewards like cashback, points, or miles for your spending. And some even provide perks like travel insurance or extended warranties on purchases. Plus, using a credit card responsibly can help build your credit history and boost your credit score, which is important for things like getting a mortgage or a car loan. However, credit cards do have their downsides. The most significant is the potential for debt. If you don't pay off your balance in full each month, you'll be charged interest, which can quickly add up. And if you spend beyond your means and max out your credit card, you could find yourself in a difficult financial situation. Additionally, credit cards often come with fees. There could be annual fees, late payment fees, and foreign transaction fees, to name a few. It's important to read the fine print and understand what you're signing up for. Another potential drawback is the impact on your credit score. If you miss payments or use too much of your available credit, it could negatively affect your credit score. While credit cards offer convenience and rewards, remember, it's borrowed money that you must repay, often with interest. So, use your credit card wisely, and it can be a valuable tool for managing your finances. Now onto charge cards, which are less common but offer unique benefits. Charge cards, sometimes confused with credit cards, are actually a different beast altogether. The primary difference lies in how you repay your spending. Unlike credit cards, which allow you to carry a balance from month to month, charge cards require you to pay off your entire balance at the end of each billing cycle. Now, you might be thinking, wait a minute, that sounds a lot like a debit card. But here's the twist. Charge cards don't have a preset spending limit. This means you have more flexibility with your spending, but it also means you need to be mindful of how much you're spending, since you'll need to pay it all off at the end of the month. So, what are the pros and cons of charge cards? Let's start with the benefits. First, because there's no preset spending limit, charge cards can be an excellent tool for large purchases or unexpected expenses. Second, many charge cards offer rewards programs, similar to credit cards, which can earn you points, miles, or cash back on your spending. However, there are a few drawbacks to consider. Since you have to pay off your balance in full each month, charge cards may not be the best option if you need to carry a balance. Additionally, charge cards often come with high annual fees, and because there's no preset spending limit, it can be easy to overspend if you're not careful. Another thing to note is that not paying your balance in full each month can lead to hefty fees and can negatively impact your credit score. This is because charge card providers report your payment history to credit bureaus. In conclusion, charge cards can be a great tool for disciplined spenders who can pay off their balance each month. They offer flexibility and rewards, but require careful budgeting and prompt payment. So, if you're the kind of person who pays their bills in full each month and enjoys reaping rewards, a charge card might just be your new best friend. Charge cards can be a great tool for disciplined spenders who can pay off their balance each month. Now that you know what each card does, let's put them side by side for a clearer comparison. When we look at fees, credit cards often come with annual fees, late fees, and interest charges. Debit cards, on the other hand, usually have fewer fees, typically for overdrafts or out-of-network ATM usage. Charge cards can carry hefty annual fees, but no interest charges, since you pay the balance in full each month. Moving on to interest rates, credit cards are notorious for high interest rates, which apply if you don't pay off your balance in full each month. Debit cards don't have interest rates since the money comes directly from your bank account. As for charge cards, since the balance is paid in full each month, there's no interest to worry about. Next, let's talk about spending limits. With credit cards, you have a preset limit, which can be increased or decreased based on your credit history and income. Debit cards are limited to the amount of money in your bank account. Charge cards, interestingly, don't have a preset spending limit. However, this doesn't mean unlimited spending. Your purchasing power adjusts according to your use of the card, payment history, and financial resources. Lastly, let's look at repayment terms. Credit cards allow you to carry a balance from month to month, accruing interest in the process. Debit cards require no repayment since the money is instantly taken from your account. Charge cards, on the other hand, require you to pay off the balance in full each month. As you can see, each card has its unique features and uses, and the best one for you depends on your spending habits and financial discipline. We've covered a lot of ground today, so let's wrap things up. We've delved into the world of debit cards, credit cards, and charge cards, each with their own features and benefits. Debit cards give you the convenience of plastic, but only spend what's in your bank account. Credit cards offer the possibility to borrow money, potentially with rewards, but with the risk of accruing interest. And charge cards? They're a unique breed, providing plenty of perks, but requiring full balance payment each month. But the crux of it all? Understanding these differences allows you to harness the power of these financial tools responsibly. It's about knowing your own spending habits, financial needs, and managing these cards wisely to avoid pitfalls like debt and poor credit scores. Remember, the right card for you depends on your financial needs and habits. Make informed decisions and use these tools wisely to manage your finances effectively.